happy Monday. How's it going out there? Hope you're having a good day. Welcome, welcome. This is a quick show that we call it the closing beat, to cover the stock market, the good, the bad, and the ugly for the day. We just go over all of it there. Hope you enjoy. We will probably have a little less to cover this week because it's sort of the beginnings of the end of the year. It's really, the end of the year is pretty much here. It's done. So unless there's any major news or anything that shocks the markets throughout the day, you can largely expect to see the markets make a move in the beginning of the day and then pretty quiet. So in the meantime, take a guess. Go play our game. It's called Guess the Dow. Go to jazzwealth.com/guess the Dow. Tell me where you think the Dow is going to close next week, holiday included, and we'll give you $100. Our winner last week happened to be a customer of ours. Don was our winner, so we credit his account $100. If you're not one of our customers, you can still play. We'll just send you a $100 gift card if you happen to be the winner, and good luck to you. I wish you well there. Hey, posted a video today to go over like where to invest in 2020. I hope you'll check it out. It's really detailed. There's all kinds of data in there. I'm probably going to share some of it here with you here today, so we'll see how that goes, but check it out. It's a little bit longer than we normally do, but I just chock full of data in there, so if you want to check that out, get some insight as to how things have been performing and what to look for in the new year, hope you'll check that out. I just saw people doing these videos of like a decade in review, and I thought, well, that doesn't really help anybody. Let's look forward. Let's talk about what to do going forward. And like I said, I included as much as I could without getting in trouble. If I do get in trouble, I'll have to take the video down, so go enjoy it while you can. It's on our YouTube channel, Jazz Wealth Managers. Let's go. Let's get started here. Talk about the markets. You got 100 points on the Dow today. You got S&P up 22. That's a new record close. 79 on the Nasdaq there. Like I said, the year's basically over. You got no Fed. You got no major economic news for the rest of the year, and you have really no earnings to come out here. So a lot of times what people will do that week between Christmas and New Year's tends to be extremely quiet. But given that it's happening sort of middle of the week next week, you kind of already saw the lower volume here today and just a lot of lack of activity there. Typically, the Santa Claus rally gets started this time of year. I thought I'd share some data with you here. Santa Claus rally median gain over the next week is 1.07%, 2.94% over the next month. Last year it was a little different and kind of skewed these numbers. If you're around last year, remember by this point, last year in December, we had already fallen 5%. Right? So we were already down 5% for the month of December. Over the next week and a half or so, we fell another 8%, right? So it was a horrible December last year. This year, obviously, much different. You've noticed the market's sitting at record highs here, so not that big of a deal. We'll cover more on some of this data here later for the S&P because I want to share some things with you when we get there. You had housing market news come out today. Very bullish there in terms of housing market. The housing market index, which is just basically a sentiment survey of home builders, came in way better than expected. I'll try to share some of it with you here on the screen. Yeah, you can see it. Here's the housing market index came in at 76. That's about 5.5 points better than expected. Highest reading since June of 1999. You can go back over here. If I zoom out, you've got, what do you got here? We're going back to like 1985-ish, right in there. So you got to go all the way back to 1999 to find a time where we were as high as we've been in the past year. So home builders very, very positive going forward. In the background there, you could see the recessions as sort of highlighted by the light gray, going back into that area. So you can kind of see if you're a contrarian sort of player, you don't like to see sentiment so high. If you are not contrarian, then no big deal. Here's the 30-year mortgage rate. We always plop that over the top of it, or at new lows here. Obviously, low interest rates, very well for home builders there. They're very excited about that. I will point out there was a couple areas that saw a little bit of a downtick. In the Northeast, well, let's just clean this up a little bit. There you go. In the Northeast, you saw a little downtick in sentiment overall. And then over in the West, I believe, was the other area, saw small downtick overall. So if you want to break down the housing market survey index there down to the different areas, paying attention to that or care about what's going on there, that's what you have. Let's go over to our sector breakdown here for the day. We'll dive right into it. I'm going to pull up. Sorry about the charts. They're going to look a little bit odd today. Because for whatever reason my other charts failed to load. Let's talk about where the sectors are at here. Your best performing area is going to be, there you go, that's the tech sector, XLK. Sorry you can't really see it. Can I bring it in a little bit more for you? I want you to be able to see the ticker symbol in case you like to sort of type that stuff in. There you go, good enough, right? Somewhere right in there. That should help you. Here's the tech sector. Hit new highs today, most overvalued area of the market right now. Over the last 5 days, it's gained basically, let's call it 2%. Last week was the change there. It's now up close to 47% overall if you include today. Very strong gains on that one. The tech sector looking really, really well. In second place, you got consumer discretionary. XLY will use. That was also your best performer in terms of range from low to highs last week, moving back up and over this range, trying to give you a little bit of a breakout, gains of about 1.5%, almost exactly there to the upside. Your biggest mover to the downside was real estate. You can use any ETF for that. If we look at real estate here, off to the far, I'm just going to go like this. There you go. Let's bring it in there. I'll mention the symbols for you. But you got real estate, biggest mover from highs to lows last week. So that was your biggest mover to the downside. Technically a little oversold here in the short term. Losses of 2.41% over the last week there. So kind of give you an idea what's going on there. Your second biggest winner, communication services, your second biggest loser, I should say. Only lost 1/3% last week, but still down just a little bit. And this week already recovering all of it and then some. So gives you a little idea of what's going on there. Let's take a look at a few other areas here. Sector-wise, semiconductors moved back to highs, closed basically, let's call it 1/3% on 3/4% is what I'm trying to say. On the week there, a little extended in the short term, totally cool if you want to see that pullback. Broadcom was the big reversal there from Friday. So Friday had the earnings come out, reversed all of Thursday's gains. Today, recovering all of Friday's losses. So a bit of a whipsaw back and forth on Broadcom. Broadcom makes up about 5% of that ETF there, so you understand where the semiconductors are coming from. Financials a little bit higher today, about 1/3%, continuing their little uptrend there, looking really good. Industrials, you'll notice one of the weak spots today, that was basically flat. Industrials lower thanks to news on Boeing, which is probably going to weigh on this also tomorrow, and FedEx, which we'll cover here in just a little bit. Those two names make up 9%-ish in the XLI. So if you're an industrial investor or you like that area or overweight in that area, a little bit of weakness today to kind of bug you there. And we mentioned REITs already being a worse performer to the downside last week. They did poke to new 4-month lows down here, but again closed off of the lows of the day. Those are just your dip buyers in there. They like to see this discount here in the short term. How much is that, by the way? So just in the ultra short term here, you got REITs down at their lows. You had them down about 5%. If we go from the recent high all the way down here to this most recent low, you got about 8%, almost 9% decline on that one. So getting back into correction territory there a little bit for the REITs overall. Okay, like I said, I'll cover some data here for the S&P and for some of these different sectors here in just a moment. Let's take a look at some stocks. You got Boeing a little bit lower on the day, headed back towards these recent lows. They announced after hours here that they were going to cut production of the 737 MAX in January and start laying off people and figuring out how they're going to pay them and everything, which kind of sucks. That's their best selling plane. They've been cranking these things out and just putting them in the parking lot for now. They've decided they are going to cut that production in January. There was also rumors of a dividend suspension there. Just a rumor at the moment. Don't know of anything official, at least as far as I can tell. But that would be sort of huge for them. So we'll see. You kind of just want to see them give, like, just let us know. Like, what's worst case? I love when companies go through some sort of scandal or something like this, and they just come out and they throw it all out there and they say, we're expecting this to be horrible and we won't be back in the air until like March or something like that. Take the hit on the stock right away. Boeing has chosen not to do that, and so the stock was a little bit lower on the day today and likely going to be lower tomorrow with the official news there. During the day, it was just kind of a report that maybe they were going to consider cutting production, and then after hours they said, yep, officially we are going to do that in January. Amazon. Shares were a little bit higher today, but I'll tell you what wasn't higher, FedEx. FedEx moved down 1% today. Amazon is banning third-party sellers from using FedEx Ground for their Prime shipments, and Amazon's quote exactly, by the word, they're going to ban this until the delivery performance of these shipment methods improves. They're not happy with FedEx there, and they're also trying to obviously take over shipments themselves as they expand there. What's kind of cool that Amazon did here, so FedEx reports earnings tomorrow after the close. So now FedEx is going to report their earnings, but they're going to have to address this thing with Amazon. So expect to see that in the conference call well, tomorrow. So there you go. Live Nation in the news there, very volatile over the past couple days, moving back down towards the lows. The Department of Justice considering legal action. What do they call it? Live Nation. I think of this. Live Nation owns Ticketmaster, and there's been reports that they've been sort of bullying these venues into using Ticketmaster, and so the Department of Justice is going to take a look at that. Also, maybe it's kind of bad timing here, but on the 23rd, the day before Christmas, Live Nation is going to be in the S&P. They're going to take the place of affiliated managers there. So Live Nation making their way into the S&P. Let me just point out the other ones here. Zebra Technologies, they're going to be added on the same day into the S&P. They're taking the place of TripAdvisor. TripAdvisor being booted from the S&P and moved down to the S&P 400. And then the last one you have is Steris. Steris is going to be put into the S&P 500, taking the place of Macerich, or Macerich, I don't know how you say it. This will all happen on the same day. Macerich is not moving into the S&P 400. The others are. So a little bit of a shifting around there. Let's move on. Urban Outfitters, there you go. Basically flat on the day. Urban Outfitters was downgraded today by Loop Capital. They said they're concerned about the promotions of other specialty stores weighing into some of their sales here at Urban Outfitters. The stock was basically flat. Not really a big deal there. There's two stocks in the healthcare space today you're going to notice at new highs. There's a couple others as well, but the ones in the news today were Amgen, which we happen to own here at Jazz, so we're happy because Goldman Sachs added that to their conviction buy list. They think that the sort of the headwinds for Amgen are receding. That was their words that they used there. They also see that they're going to be, they feel like they're going to be raising their earnings estimates, and so that stock got a nice boost today. They also added UNH to their list as well, 2.25% gain on the day. And so some of the other names in the space, like Pfizer, up 2%, got a little bit of a boost from there as well. Then that's because of the Goldman Sachs upgrade from of UNH and Amgen there. So there you have it. A couple stocks in the news for you. All right, you've got 73.6% of the S&P 500 above the 50-day moving average. We were at 71% on Friday, so a little bit of an uptick. Did a little bit more research here for you because I like doing this stuff. There's only 24 stocks that are more than 5% away from getting above their 50-day moving average. For example, you got Twitter. Twitter is currently 5% away from getting above the 50-day moving average. And then Boeing, just since that's in the news, that's now 8.5%, almost 9% away from getting back above the 50-day moving average. So I wanted to point out of the 505 names in the S&P 500, you have only 24% of them are 5% or further away from getting back above the 50-day moving average. All the others are either above or currently in that 5% range of being above the 50-day moving average, if that helps you any. Hope it does. We had 77 new 52-week highs today. We had 74 on Friday, so we got a good little list going here. I'll point out some of the obvious ones. Well, we just mentioned it. UNH hitting new highs there. Amgen, of course, hitting new highs. You had Humana also in the mix, about 3.5% on the day. New 52-week highs as well. United Rentals hit new 52-week highs today. Also, this apparently is one of the best performers over the last 10 years, up like 1,000%. Over the last decade here. I saw that on a decade in review thing on Bloomberg or something. So not that you can do anything with that. I don't like that kind of stuff. But anyways, one of the better performers, and it also hit the new 52-week highs today. Fortinet hit new 52-week highs as well, hinting at not hinting, but showing a little bit of a breakout here on the charts. If you were to just kind of draw a little line, you look at these series of equal highs today, trading well above that, gaining a total of 1.5% on the day there. One last one, also in the breakout category. I like pointing these things out when I can. Sempra, it's an energy stock. Go over here. You got a series of equal highs today, breaking out above that, adding about 1.25% on the day. You had no new 52-week lows today. Of course, that's good news. Those REITs from the other day, Ventus and Simon Property Group, both bounced off of their lows, so they did not hit new lows today. That's kind of interesting. And that's what you have there. So let me see if I can share some of this from our class here. The S&P 500, we just talked about that earlier. The Santa Claus rally, median gain of 1.07%, 2.94 over the next month. But hey, what about in our class? So the video that we posted today, here's the S&P's performance after being up 20% year to date? What happens in the year following it? So in that class, I won't go over it again, but I went through all of these here. So these are all of the years where it gained 20% or more, and this is the year following that, the best and worst performers, so you can see exactly what happened with the average gain and the median gain down at the bottom and percent of the time being positive. It's kind of a fun thing we like to put together. So this is a very familiar looking chart to some of you, but we went even further today and we said, well, what happens when we're up 20% year to date at this point? Right? Or more, right? So December 16th, up 20% or more. What happens for the rest of the year? What should we expect there? So for the rest of the year, the S&P averages a gain of 1.78%, median 0.93% for the rest of the year when we're already up 20%. So there's 19 other times that that's happened. Only 4 of them were negative, and it was a minimal loss there. It wasn't even that big of a deal. So for the most part, let's see if I can do, I can't do that math real quick. Let's see what happens here. So you got 4 divided by 19. So only 20% of the time was the S&P negative for the rest of the year, and it was a very small amount, by the way, after being up 20% for the year to date, right? So kind of interesting there if you're curious there. Let me show one more thing here. Sector-wise, here's the performance of the sectors overall. So you might want to go check this class out, but I'll just put this in here for you. If you break down all the individual sectors of the S&P, you got the S&P in blue here, right down smack in the middle there. And then off to the left, these would be sectors that perform better. Off to the right, these would be sectors that have performed worse. Tech sector, you can see just blowing it away today, now pushing a 47% gain on the week there, so on the year so far. So just thought I'd share that with you guys as well. A couple other stocks, and then we'll take your questions if you have any. Tesla hitting new highs here as well, 52-week highs. That's up 6.5% on the day. Got some positive comments from an analyst out there that said, you know what they're doing in China, building the new factory and manufacturing new cars over there, getting the subsidy and all this great stuff. They think that Tesla will be more efficient over there because of what they've learned here in the States, and that plant will start producing cars more efficiently and faster than any other plant, just based on lessons learned over here. So looking good there, and they actually think they're going to hit their delivery goals for the year. It was like 630,000 vehicles with that plant there. So that's something interesting for you. Disney, just a touch higher here today. They're going to launch, they made a deal with one of the broadcasters over in France. They're going to launch Disney Plus in France by late March of next year. So a little positive sort of push for them in the short term there. And that's basically what I have. Late in the day here, we got some news from the Secure Act that is very likely going to be included in the next spending bill. They have until December 20th to actually attach that to the spending bill, but it looks like all of that is going through. If you are a fan of the Secure Act, which, yeah, there's some things in there, but for the most part, raises the required minimum distribution age to 72 from 70. And there's some perks for employers and things like that, but it also, one of the downsides to the Secure Act is how it eliminates what's known as the Stretch IRA. So the Stretch IRA is like if you have a family member, not a spouse, but if you have a family member, I'm going to do a video on this as well. We'll talk about inherited IRAs, but if you have a family member that passes away, right? Brother, somebody that left you as the beneficiary to an IRA, and you collect it in an inherited IRA, you have a few choices. You can take all the money out, pay all the taxes. Nobody does that. You can stretch it out over 5 years if you'd like, and just by the end of the 5th year, you just have to erase the whole thing. Or what most people do is they stretch it out over their lifetime, and so then they pay less taxes. The money gets to grow a lot longer. Well, in the Secure Act, it looks as though they're going to put a cap of 10 years. So now your new choices will be 10 years before you have to deplete the whole thing, 5-year rule if you like to, or you can take the money all out right away. That's unfortunate because that's going to mean more taxes for you, less time for the money to grow, yada, yada. You get the idea. So a lot of people are against that Secure Act for a number of other reasons as well, but looks like that's going to be approved and attached to the current spending bill. They have until December 20th, so we should be finding out any day now. I think they're working on it today, to be honest with you. Whew. Okay, that's what I have for you. I will take a second, try to answer your questions there if I can. Let's see what we can do. So, first question I see, you see the VIX was up 20% overnight. Where were you looking? I do not show the same thing. Looking at VIX futures overnight, there was no 20% pop at all. So, you might have got a bad quote there. If that helps you. Harry, are you the only Tesla investor? I have nothing against it. It's a tough stock to invest in, considering all the other options out there. But I'm sure somebody else has some Tesla with you. Thanks for the compliments on the FinTips video today. It was a lot of work to put that together, but I think it was well worth it. Gives you some insight. You want Bank of America to go down? Is that you want it to pull back? Financials in general have kind of been in this melt-up sort of period there with very little to the downside. Now, they will be the first to start to roll over when the markets pull back, but as of now, yeah, it's just sitting at highs. I'll cheer it lower for you, but I don't really know. I don't have much else to offer there. Hope it moves lower for you. Watching crypto today. You like it moving lower, Charlie? Down 5% today. I don't know why you want it to go lower. You kind of hope for like a waterfall drop. Crypto's been in this sort of habit of, especially Bitcoin, if you look at Bitcoin futures, been in this habit of just sort of like getting punched and then sideways, and then punched and then sideways. Very few like kind of waterfall drops that you can get excited about. Any thoughts on AT&T? What in particular there? It's been moving sideways for a while, so we haven't talked a whole lot about it. They raised their dividend just a touch. And they're working hard to pay off some debt. I've commented on that a few times, but not too much going on there that I think I can elaborate on. Energy is the worst performing sector of the market. The XLE is the worst performing sector of the market. It's currently the highest yield. If you saw that FinTips video in there, look, I'm a contrarian guy myself, like with my personal sort of approach to things. So it's hard not to want to participate a little bit in something that everybody hates at the moment, is trending a little bit lower. All the outlooks for next year in terms of oil production, oil prices are all very, very low. It's hard not to want to run over to that. I know. That's a tough one there. Oh boy. Cool. Any stats on the Nasdaq performance after having such a good year already? Absolutely. So in that video, we did cover the Qs in particular that you're talking about there to kind of show performance going forward. We did the S&P, the Dow, the DIA, and the Qs for years where they've gained over 20%. The Nasdaq, you'll find, has every opportunity to continue higher. That's a beast of an area there. Yep. I have no thoughts on Viva. Those are tough questions for me to answer. I'm not sure. You got to give me some insight there. You a short-term, long-term investor? You trading it? Do you just like the stock as a long-term investment? When you be a little more specific there, help me out. Yep. Tandra, you like some of these Chinese names there? Baozun. So Baozun, obviously a nice little discount. Worries me that you've got a lot of relative strength in other names in this sort of Chinese space there. So kind of bugs me that this one's not getting played with here. So that one would bug me a little bit. But look around, iRobot's a tough one. I mean, you might have some news in the short term about holiday sales and things, but that's been a tough one. Cisco, I could understand why you think like, okay, got a good discount here. It's a good little, robust position to add to my portfolio if that's what you're thinking there. And of course, a slower mover as well. And then Canopy Growth, the pot stocks, I pretty much keep the same comments on the pot stocks right now. Those are really tough. Yep. I love it. Welcome. FinTips video from today. So you go to the YouTube channel and just look at the most recent video uploaded besides this one, and that'll be the one. It's called Where to Invest in 2020. So, yep, there you go. What would be your risk if you only have the Nasdaq and the S&P 500 in your portfolio? Meaning what? Like what's the risk? I mean, that's a broad-based sort of index, double index fund to participate in there. I'm not sure what the question is there. You'd certainly have more volatility, but it depends on how much of each that you had. So that's a tough one to answer. Yep. All right. Long-term thoughts on LTC properties there. So when you are looking at an area of the market that is pulling back, right? So you've got REITs pulling back a little bit. You want to find in my opinion, you want to find the stocks that are pulling back less than the sector, because that's telling you something. It means the smartest people that analyze these areas of the markets are saying, okay, these ones are no good, but these we're going to hang on to. LTC's pulled back considerably more than the overall sector. So you're playing with what's known as a relatively weak stock. You don't expect to see those rocket ship back up overnight and everything to be, back to normal. Is the Qs related, correlated to the tech ETFs? Absolutely. I was working on a new sort of graphic to show you guys correlation, because I get a lot of questions from customers where they say, I've built this portfolio, where am I at? What am I looking at here? And I always go to the correlation first. So I've sort of built out my own little correlation platform there, and I'm thinking about making more videos on that to kind of show like your correlation of the Qs to some of the bigger names in there, so you can get a feel for if you own the ETF, but then you're kind of picking and choosing some stocks in there, what's the risk? So we'll probably have some fun with that. Yep. Melt-up situation based on euphoria usually ends up with a sharp correction. Well, that'll answer that as my last question there. So when you notice this sort of thing into the end of the year, you gotta play the tax game. All the big money's playing the tax game. I sent out an email to customers and a few others this weekend about what's going on, this sort of air pocket that you're talking about in the market right now where it just keeps bleeding higher, or they call it a melt up. Why would it likely not pull back before the end of the year? And it all has to do with taxes at this point. Remember, you guys have different rules than the sort of bigger investors, right? You can sell positions and write off $3,000. The new tax law says that if you're in an LLC, if you're set up as a trading firm, or you're a bigger investor, you can write off as much as you like. Right? So why would you go and sell your winners and volunteer taxes at the end of the year when you could sell your losers and add that money to the winners without really hurting your cost basis there and get to take as much taxable loss as possible? For that reason, I think you don't see volatility until we get into January. And keep in mind, the first 2 days of January are always the most volatile days of the year. You take the entire year and you measure volatility back to 1928, the first day of January, which in this case will be the 2nd of January, and the 3rd, always the most volatile. And why do you think that is, right? If we get the Santa Claus rally into the end of the year, and then all of a sudden the new year starts and you go, great, now I can sell some of these winners. I've been dying to take my profits, but now I've got from the January time that I sold them all the way to the end of the year and a few more months until I've got to pay my taxes, maybe March if you're a corporation or April if you're an individual. So, right? Think about it. You've got millions of dollars on the line, you're not selling a thing in terms of capital gains there. Yep. So we'll see. What do you invest in if you think a company is going to lose value? Meaning you think it's going to go down, then you would maybe consider shorting the stock if that's something you're comfortable with. Something like that. Maybe that'll help you. All right, I'll wrap that up here. I appreciate you guys joining me here today. I hope you have a great rest of your day. We'll be back tomorrow to do this all over again, and I hope you enjoy. So thanks for watching. Check out that video, Where to Invest in 2020, and that'll help with some of the data. Lots of great data in there. I just kind of went nuts. Sorry about that, but I think you'll like it, and we will talk to you tomorrow. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance covering investing, personal finance, and anything that can quickly help you with your dough? Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.